I became a shareholder of UOB during the COVID-19 pandemic-induced bear market, taking advantage of the market pessimism. I was a shareholder of DBS and OCBC before the pandemic but was holding back on UOB due to its comparatively less exciting growth story. The decision to invest in UOB during the pandemic was primarily driven by a consideration to diversify and to have equal exposure to all three Singapore banks. Also, the much lower stock price during the pandemic made building a significant position in UOB desirable and much easier. Of course, the decision was fortuitous as UOB's growth story turned exciting when the bank decided to buy Citigroup's consumer banking businesses in Indonesia, Malaysia, Thailand and Vietnam for about $4.9 billion. Citigroup's consumer business had an aggregate net asset value of about $4 billion as of June in 2021. It had a customer base of about 2.4 million as of June 2021, and generated about $500 million in income in the first half of 2021. UOB reported stellar Q1 2023 results this morning, and the CEO shared a succinct summary of the bank's performance and outlook. Recent pockets of banking instabilities in the US and Europe have led to some market volatility and added to concerns over the global growth outlook. Amid the challenging operating environment, our prudent management and long-term focus have put us in good stead. We delivered record profits this quarter backed by our core businesses and diversified growth drivers. We also focused on strengthening our balance sheet. Our Citigroup integration is progressing well. We are on track to close in Indonesia by the end of the year after completing our acquisition in Malaysia, Thailand, and Vietnam. Asia is poised to register growth this year, and we are well positioned to ride on the region's economic recovery with our strong balance sheet, backed by healthy capital and liquidity positions. I will leave a link to the bank's presentation slides for Q1 2023 in the description below. What does AK like about the summary? 1. UOB has always been conservative, and this is a good thing amid market volatility. 2. I like that as they think of growing profits, they have an eye on strengthening the balance sheet. 3. Their acquisition of Citigroup's business in Malaysia, Thailand, and Vietnam will be contributing to income this year, while Indonesia will start next year. The last time I increased my investment in UOB was in October last year at close to $26 a share. Although UOB has delivered a stellar performance in Q1 2023, I feel that the coming months will be more challenging. Net interest margin expansion will slow as funding costs continue to increase. As UOB is already one of my largest investments, I will not chase higher stock prices and will instead wait for a pullback in the bank's stock price before increasing exposure again. From its chart, I see immediate support for UOB at around $28 a share. Why am I thinking of increasing my investment in UOB? Simply put, I expect UOB to continue doing relatively well even as the US Fed is expected to pause interest rate hikes after one more round in May. So, my investment in the bank will be generating meaningful passive income for me in the years to come.